Is the stock market about to crash? Hi, it's Charlie giving you your midweek video. So I've got a weekly chart of the S&P up here, and there's growing calls for some form of market correction or market crash. Some people are talking about crashes out there, and I think that it's just good to put my views overall here as well towards the markets. So what we're going to do is we're going to have a look at some of the elements that are going on here, and why people talk about crashes and markets having deep corrections at certain times, and the arguments perhaps for this bull run to still continue. So let's go back to the daily chart first of all, and we'll come back into the weekly time frame in a minute. I've got the S&P up here, just an S&P CFD continuous contract here, which replicates effectively the S&P futures. So as we can see, yes, we're in a bull market, a bull run. We had a bit of a pullback, a proper correction pullback back from last summer through into late October, and then really since then we've been on a run. Now, I remember the first week of January this year, as soon as the stock market was having this pullback here, just on those 5 days in January, the amount of people who were getting pretty bearish even back then, and yet with the benefit of hindsight, of course, we now know, oh, that was nothing. But there was a lot of bearishness out there, even in the investment manager arena as well, that I delve into myself. So, and then again, when we had this pullback just into April of this year, there was a growing choir of people looking for this to be a bigger pullback than it was. It was just a 6.5% correction at that point. So here we are now. Could the market pull back? Of course, the first answer is of course it could do. Markets do correct and pull back from nothing all of the time. So could the S&P? We're into June. We're coming into the summer. Could it go into an underperforming period through the summer? Yes, of course it could do. There are always arguments as to why a market may pull back. But if I come to the weekly chart, there were lots of arguments being made back in early part of 2023 before price broke out as to why the market actually was going to roll back over and continue to the downside. There was lots of people looking for that in the early part of 2023. So in the markets, you need to have a good memory. You need to remember all this stuff, because there are people out there looking for market crashes all of the time. I've been trading like 27 years now. And of course, there are times when some of those people are going to be right. But what I think most people have to keep at the back of their minds is the markets go up for more of the time than they go down. And most traders, if they keep on just shorting the market, they usually end up losing money, even if they get some shorts. And don't get me wrong, if you're a trader like I am, there are times when I will be short the market. Through 2022, yeah, I had a few shorts through 2022. That was a bear market. But we're coming back to where we are at the moment. And so, of course, the market's in a good run here at the moment. Over the last, 2 months since this past pullback in April, the stock market's just been on a one-way street. Taking this back to the daily chart, it's in the main been in a one-way street. So what I look at are a number of factors. I look at market sentiment. I look at historical probability, especially as the S&P has come up at 5,500, big round number, so to speak, at the moment, 5,500. So it's more than possible that the S&P could put in a pullback, because it's just had another 2 to 3 week streak here on the upside. But in the grand scheme of things, I have to look at the historical probabilities of what's gone on in the market. Oh, talking of which, I'm doing a webinar in conjunction with Tickmill coming up tomorrow, Thursday that is. If you haven't signed up for it and you'd like, I'm going to talk about all the the probabilities for the second half of this year. So if you want to do that, the link will be in the description below this video. So the historical probabilities still suggest that 2024 will be a positive year. Now, having said that, when you look at where the S&P is from where it opened up at the beginning of 2024, well, it could comfortably pull back into, let's say, the end of the year and still be positive. So there is an argument for that, but there are some probabilities and statistics suggesting that the S&P should end up somewhere in the 10 to 20% bracket by the end of the year. So I'll be discussing those in tomorrow's webinar. Now, from a sentiment perspective, we look at the greed and fear index. Well, we're in fear at the moment. We're in the fear zone. So this is what typically happens. Markets ride a wall of worry when they're going up. So what happens is, as markets go up, traders think they can't possibly go any higher, so they think that they're going to have to come down. Now, of course, like I keep saying, there's always going to be a point when a market may well top out. And in fact, I'm looking for the markets to have a pullback at some point when you think we've got the presidential election coming up. Ideally, as far as I'm concerned, if I was looking at the cycles, I would be looking out towards late summer, potentially as a top, and then some form of top, should I say. I have to be very careful what I say here, because I'm not looking for a crash. And then some form of correction, maybe September, October time, which would make sense as the markets get a bit nervous as they start zoning in on that presidential election that comes in early November. So it could be that it's a bit too early at the moment for a correction. Not that we couldn't do a bit of a pullback and then still go higher into later summer, and then we'll see from there. So it wouldn't surprise me if we did see a pullback at some point. But the question for this video is the market about to crash? I don't believe it is. We're in a strong technical trend. We've only, in relative terms, we'll go back to the weekly chart, just come out of a bear market which bottomed in October of 22. You don't normally go back into a new bear market less than 2 years after the bottom of the last bear market, let alone once we'd officially come out of it. So usually a bull market will run for several years before the next bear market. So again, statistically, we shouldn't really have one. Now, as we always know, anything can happen in the markets. We are at a certain point in the economic cycle. There are certainly arguments going forward that and they're all ifs and buts, if the US economy started to tire a little bit more. We've just had this week, we've had retail sales come out which have not been encouraging. The consumer's not spending quite so much. So there's a few bits simmering away, but there are other parts of the economy which are doing quite well. So it's difficult to predict when one of these things is going to happen. There are lots of false signals that come. There are lots of false signals, and if I've been around for long enough where I've seen all sorts of false signals, even last year in 2023, there was lots of false signals calling for bear markets then, and even into the beginning of this year, and as we've come into this year in 2024, false signals. So in the main, you're better off looking at the market and saying, right, I don't need to short this, but if we do get a pullback, what I do need to do is have a look at given levels where I would want to be a buyer, and look at it in that way rather than trying to catch a top necessarily. And don't get me wrong, there are times when you might have a technical setup which might justify some form of trade at some point, maybe a double top or all sorts of reasons why you might look to short the market. But the main thing that I want to say is that it's difficult to predict if a crash is coming, very, very difficult, and crashes tend to not happen very often. So you're better off spending and putting your energy into, well, if we do get a pullback, I might be able to get a little bit of a trade out of that at some point. But overall, all of the time, technically, we're in a bull market here. I want to be looking at any pullbacks as potentially buying opportunities. Like I said, I'm going to go through all of those statistics tomorrow in my upcoming webinar. Check it out in the description box below. But for now, and although the markets have had a very, very good run, and yes, I can see the potential for a pullback happening, preferably September, October. But as far as crashes are concerned, I'm not there with that at this stage in the game. Things could change in 6 months' time, of course, but I'll worry about that in 6 months' time. Always better to be an optimist in the stock market rather than a pessimist. There you go. Enjoy the next few days. I'll be back on Saturday for another update.